Welcome everyone to the Kindle Report. Thanks for showing up for my brief video I did earlier today on day trading. Actually set up a really good trade there. So if you didn't see that, go and check that out. Make sure you get the indicators so that you can use these things to make some money. There was a couple folks that actually claimed they made money while I was demonstrating how to use those. So thanks again for everything. You folks are doing a great job. Another 1.2 thousand likes. Let's keep up the good work. Let's see if we can get it over 1.5 today. I mean, there's literally, we should have, I think, 2,000 or 3,000 likes. So let's get this going and let's start getting some more subscribers as well. So tell your friends. Okay, folks, this is going to be a fairly quick video, but we're coming into the critical phase for this week. I've been talking about the GDP numbers that are coming out. We've got claims coming out. All of that stuff is coming today, otherwise Thursday. But this is going to be a significant setup as we come into Powell's speech. So just remember one thing. Bad news is good news right now. It was funny because you're seeing all kinds of folks. I mean, the amount of bearishness that's building out there is just insane. And I'm not super bullish where I think there's a new high coming or anything like that. I laid it out pretty good 2 nights ago in the channel, so make sure that you go back and watch that. And I'm going to repurpose that. And I'm trying to keep from sneezing at the moment, so bear with me just 1 second. Okay, good. I think it's going away. But the bottom line is that the GDP is expected to come in at minus 0.9. The deflator at 8.9, and I think both of these numbers, they could come in worse, but I think that's a good thing because as the boys, our central planners, are planning the rest of our life for the next year or so and how we're going to live. I feel sorry for, I guess, the folks in Europe because it looks like you're going to have to buy some extra sweaters maybe. But the bottom line is, this is going to be a big setup. We're already seeing some overnight strength. We're seeing the Russell the NASDAQ up 0.31. It was up a bit more than that, but up 0.28 on the S&P, up 11 handles right now. We're printing into this 4150 level. And I'll lay out in the technical section, there's a key number I want you to watch for today. And if we do close above this level, then just be prepared. We're going to retest the 200-day moving average. More on this in a few minutes. So yesterday we had durable goods come in at 0. There was a revision, but overall this number coming in worse than expected. All the economic numbers are coming in worse. Meanwhile, many of the technical numbers are still suggesting there's a positive tone. And I've said this multiple times, the economy is not the market. I see a lot of folks out there trying to make the market and the economy the same thing. Ultimately, they can obviously reflect the same thing, but at the moment, we saw so much weakness coming into the first half of this year. We're really still into that third quarter rebound that I was talking about going back into July. So we're still seeing that. And that's going to continue. I don't think this is done yet. And what we may end up getting, which I'll cover over the next, we'll just say several sessions, is more of a broader trading range. And I set it up in the Elliott video I did a couple of nights ago that we get an ABC pattern. And what I think we've just done is we've finished the A pattern. Now we're going into the B pattern. And that means that we're still in this choppy zone. We have another retest possibly of the lows of whatever we're making here. Just want to thank, I think it's Katja for the super chat. Appreciate that. Let's take a look at a couple other things that I think is going to dominate as Powell comes into the speech that we're going to come in on Friday. I think, like I said, these GDP numbers, claims numbers, I'm expecting to be higher than expected, as well as the continuing claims to continue to uptick. And, you know, we also saw the same old story with home sales being down, but they weren't as bad as a lot of folks were expecting. And so we're just getting this mixed economic picture. Don't try to equate what's going on in the economy to the markets right now. It will not work out for you. That's not what's driving the market. So you can hear all kinds of noise. Just know that bad news is good news. And I think at the moment, even good news is good news. So we go through these cycles where good news is good news and bad news is good news. And then we have different cycles. But I think we're into any news is good. It's going to keep a bid in the market. I don't see a lot of downside you'll see here in just a couple of minutes. So let's take a look at the database because I talked a lot about that last night. Let's try to get through this video fairly efficiently because I think really all we have to do here is set up some of the prices that are likely to hold here. Last night's video was that support would hold. It did hold so far. We still have some work to do. Let's get into the database. Unbelievable. How long was the sound off? I don't even know how that happened. So just now you're hearing sound. I've had trouble with this box today. So you're hearing me now, right? And you heard the opening comments, correct? At the database. Okay, very good. So let's rewind everything, folks. I apologize, and we'll have to rewind. How embarrassing. Okay, so let's try it again. All right, so here we go. We'll go back to the database. Just a real quick review. We're at 66.73. Oh my gosh, I am so sorry, folks, about the sound. I pushed a button, it didn't come off. I had this problem earlier today. Anyway, so let's just get back into the video. Really messed up the momentum. I'm not going to get 1,000 likes, so I can't blame you guys on that one. Okay, so here we go. So the Wavetech database is at 66.73. We saw 308 sells, 151 buys. We're starting to finally see this bottom out. I don't think we get under 62%. There's no way to get too bearish in this particular configuration because of this. So we'll expect to see still a positive rotation over the next several days. So let's go ahead and look at the S&P now. All right, so the S&P, the configuration that we're seeing on the S&P, I talked about this in great detail the other night. I'll draw this pattern back in, as I think we'll see this pattern continue to unfold. I talked about this pattern here that is a 1-2. This is as a 3, and what I'm expecting now, I mentioned in the opening comments that the A wave is probably done. Now we're going to see a rally back toward the 200-day moving average, and this should be a B up here, and then we should come back down and test this again. So we're looking at probably at least another week or so of consolidation. I don't think we just break out over the 200. I think we come up and test around 4240 to 4303 is where the 200 is at. So we're just seeing this entire pattern unfold in slow motion. So I suspect we'll get at least 5 days on the upside. We're going to have another 5 to 8 on the downside. We could even come down and test the 10-period moving average and make a lower low than what we're making right now. So there's definitely a lot of work to be done here, but there's still an up trade here for the next couple days. A number that I want you to all be aware of for today is 4181. If we close above 4181, we're likely to see a positive move as we come into Friday. I believe that Powell's going to do everything to make this thing not sound bearish, not sound dovish, not sound anything but everything's okay. We've got this. So you are seeing the video, right? But everything that Powell's going to do on Friday is going to set the tone for the entire series that I'm talking about here, this ABC pattern. What we're seeing here on the PPMs, PPM 1 is trying to turn back up a little bit. PPM 2 is still burning off. It's at 0.15. So that's actually still the minimum value that you need to have on the PPMs. PPM 3 is still positive at a 0.20. So that is telling us that even if we were to decline into a new low, two things are evident: that we're going to possibly get down to 40.41, 40.60 is going to be the extreme. If we did another leg down, that's going to be your ultimate buy pattern. If we get down there, my expectation is that pattern that I just drew in. So as we look at the NASDAQ, as I mentioned yesterday, 2 days ago, we got an exit on the long trade that was in on the models. We're also neutral on the NASDAQ. And the same pattern that I was just talking about here is evident here on the NASDAQ as well, is that we're getting this potential ABC pattern. I think we get sandwiched between the 40 and the 200-day moving average. So this is daily. I believe that's where the patterns are going to stay for, like I said, probably the better part of the next couple of weeks. Let me get rid of this. Yeah, so this would be this right here where I'm expecting to see this 40 period moving average continue along this rising line. The 10 period moving average is going to be declining into this pattern, and ultimately we should see a penetration to the upside from the standpoint of the pattern. We should see this close. We get a close above this line here, then we're going to test this 200-day moving average on all these indexes. And I think this pattern I'm talking about just sets up in between these ranges here. Whether or not when we finish this, we'll be able to tell whether we're going that direction or whether we're going to see a breakout. There's a tendency this will put us much closer toward the final month. We'll at least be into September, the final month of this third quarter. So we could see this thing ultimately set up so that the pattern will be down. All I'm expecting for right now is this rally, short-term rally, a retest of this low, but I think this average that I drew in here is going to be, that angle of attack is going to be strong enough to keep things up, and it's more evident on the weekly chart than it is anywhere else. Let me show you that just very quickly. So this pattern here, you can see a little more. You see the rising 10 pattern. If you recall, I haven't talked about this because we haven't had any for a while. But as we come into next week, we're going to have the rising 10 coming into the market grid, which is usually a bullish pattern. And we still have some Fibonacci projections and things up around on the NASDAQ here. Let me just bring that up so you can see it. We've got that high targets up here at 14.2, we'll call it 14.280, 14.800 is still the extremes up here. But I think, like I said, we get sandwiched between the 40 and the 10 week, and we set up this ABC sometime, not this week, but next week, maybe late next week, we'll be able to actually determine what the likelihood of the next direction is. But until then, we're basically trading. We should see a rebound from here. This is the weekly. Should see a rebound into the market grid, and we have that rising 10 pattern that will come in. I'll be talking about that next week. All right, so we'll look at the Russell next. Russell is a little bit more advanced, but we're sitting right here. Look at PPM1. It's up at 1.52. And it may see that the small cap is going to lead the way. We certainly saw that today. The Russell was up 0.84 with the NASDAQ up 0.41 and 0.29 on S&P. So we're sitting here right at this PPM 3 is at a 0.13. We don't have enough of downward pressure here to keep it from going through. And if we can trade up into the pattern here, we're likely to see, this is weekly, by the way, we're likely to see this thing move up toward probably the 1979. We could see even the 2000 mark as we start to move up. But this is a pretty bullish pattern. Let me back up and go to the daily. And I just want to reference going back on the market grid on all of these indexes for today. S1, R2 is going to be the numbers that we're going to see. Yeah, I'll take that bet with you, Yankee Doodle. No problem. Anyway, the whole problem with these markets going down right now is the bullish percent of our database, and you're just looking at indexes. They're going to lead you a little wrong from that standpoint. But like I said, that weekly, if I go back to weekly on the Russell here, this PPM value at 1.53, no way we're declining below that. That's less than a 10% probability. And the last time we saw those kind of numbers was when we were over here in November of 2020. So I'm not that bullish, but I'm just telling you there's not going to be much of a decline. And other than testing these numbers and setting up this sideways pattern that I just laid out. Next market we'll talk about is the 10-year treasuries. 10-year moved up to 310. We continue to move up into this pattern. And guess what? Nobody cared. 2 days ago, remember Monday, the higher yields were what drove the big market down. And now we're seeing even higher yields and no one cares. And I'm still kind of shocked at the amount of selling that came in on Monday, but it is what it is. And we really set up, I think, a pretty good tone here. Now we've got PPM 2 here up 1.2 with PPM 1 down 0.45. Now this is weekly. So these are big trends that are setting here. If we go over to the daily, you see we are getting acceleration here. We're starting getting a little bit of a contraction. There was a fib projection here for 3.06. We've exceeded that now with Wednesday's action. So, but like I said, nobody seems to care. The yield curve just bouncing over there for a second. What we're seeing in yield curve is slight steepening on the 530. So nothing really going on here with as far as the yield curve goes. We're just stable, and that's going to continue. And like I said, the 530 is way more important to me than the 210s until we see more of a inversion on the 510s. I'm not going to be too concerned with markets right now. But this 10-year is definitely surging big. We're not really getting follow through on the dollar and other things I'm not going to cover tonight, but we are definitely seeing the pattern as far as the 10-year go continue higher. I'm going to go back to the weekly just so we can get some expectations from the market grid. Right now, market grid is suggesting 312 was R2. We're coming close to R3, 3.196. That's a very big number, and look like we're trying to turn higher. I don't think, at least for the moment, that these higher yields are going to be a factor. We'll see what comes out of the GDP tomorrow. I do expect to see a little bit of a pullback into the market grid on a daily. So those of you that have the indicators, just bring up the 10-year and look at the market grid. Probably look for at least an S1, possibility of S2 for tomorrow. The next market we'll cover is crude oil. As I mentioned, I'm expecting to see crude move back into the 96 handle or 95, 92. We're printed as high as, this is the weekly, we printed as high as 95.68. That was done just tonight. So we should see some resistance here at 96.34. We have ppm1 minus 0.93 on a weekly. So there's going to be a lot of resistance just at 96. So expect to see that stabilize here at the moment. Now I know the strategic reserve is going to stop selling here in just another week or so. And I know all about the Fed going to increase their sales of treasuries and all that stuff. So we're just starting to see a lot of these factors come in. Like I said, if you're looking at trying to equate what's going on in the economy to what's going in a lot of these markets right now, it's going to be very confusing, and you're probably going to end up being very wrong at the moment. Ultimately, it will play out, but not now. This third quarter will continue to see this recovery happen. There's just too much cash flow that's looking to come into the markets at this moment. And as far as crude goes, there's just a limited supply, and we're just going to see stable demand going across the board. Even if things slow down a little bit, there's just not anything that's going to get this market to decline. We still have a basic upward slope, and I haven't been over to this chart for a while, but let's go there and just look at that. This is something that I haven't talked about for a while. It's probably been a month, but this is what my expectations here from 109 is 103.35 is R1 on a monthly basis. And I'm expecting that we have printed this extreme and we're going to remain in this large sideways pattern. This is a monthly graph here. On a longer term basis, we're going to remain above that. 86.98 is the 10-month moving average. ppm1 is 3.06. They're very less than a 10% probability that we can close under the 86 handle. That's why we're trading where we are. And we could see as high, just going to an R2. I don't think we see that this month because we're coming into the end of the month. But as we come into next month, I expect this box formation on the market grid to stay intact. So we're just going to see probably an R1, R2, S1, S2 range as we come in next month. And we are seeing this moving average here, the 10-month moving average is up $2. So all of a sudden that 86.98 is going to be 88. We're going to round it up to 90. So 90 is going to be the bottom end of the range that is likely to happen on crude oil. So I'm going to stay with the monthly graph here as we come into the gold market. Haven't looked at a longer term. We're interesting because I have not really looked at this a lot. ppm3 is up at 0.39. That is 1793, which is the long-term 40-month moving average. We're just kind of hovering right below that, 1767. The shorter term stuff does not look that good, but we do have negative momentum above this. It's almost like looking at the Bitcoin chart where the longer term stuff is just suggesting there's tons of overhead resistance, 1800 up to 1850. And there's still, I think on the, if I flip over here to the I flip over here to the weekly chart. We still have these downward projections. We did hit this. I've talked about it several times. 1682, we came down to 1696. So that's close to a hit here. There's still valid Fibonacci's down here at these levels, 1682 and then 1598. There's a lot of vulnerability. However, if you look at the PPMs on a weekly, we're starting to see PPM1 turn up. PPM2 is turning up, PPM3. So what we could end up getting, and I'm going to draw something in here on a weekly basis, what we could get here is one of those patterns that I actually talked about today on is this 1, 2, 3 pattern where we would get something to come back in and really just set up this massive trading range in here. And it's probably more likely to on a longer term basis, we're just lucky if we get the support here. Like I said, gold continues to defy gravity, and we're just not seeing anything there from that standpoint. Most of the resistance is going to be right here. So the tight end range is going to be between the 200 week and here, which is going to be 14, the extreme 14. Let me get these right numbers. I've got to fix this. My cursor moved. So the 200-week moving average, 1744 to 1781 with extreme up here at 1846, 1864. This thing's going nowhere for a while. But if we get that consolidation, ultimately it sets up a pretty bullish monthly pattern. Here's a weekly chart on Bitcoin. We still have these fib projections out here. We're starting to get some acceleration on PPM1 plus 0.73, but unfortunately the 27,585 is massive amount of resistance. That number's coming down $1,000 a week. So 26.5 this coming week, 25.5. So you're lucky to get over 24. We did see last week we did get up to 24.9. That's going to be the top end, the cap of this. So really we're sort of lucky, I guess, here at 20,200 to 24,000. We're just locked in a range here. There's nothing really appears to be going on here in any positive way. Let's see if I can look at this daily pattern just a little bit. A little bit of a wedge. We still have negative numbers. PPM1 is down at 1.13. That's 22,585. That's short-term resistance. Not going to get above there. 23. In fact, all the way from 22.4 up to 23,000 is massive amount of resistance at that level. Just nowhere to go here. Okay, folks, I apologize for the sound issue. I think this button is sticking here. I'm pretty good about poking it, but it happened. So I tried to recover the best I could. So thanks again. If I don't get the 1.2, no penalty tonight. I understand. Sorry about the sound. Tomorrow, those of you that have access to the live room, make sure you come. We're going to convert the meeting once everybody gets in there to a Zoom meeting. So we'll get logged in over there, and we're going to have a pretty big chat about a number of things that are going on, and I will be making more announcement as we go forward over the next several weeks and months. So anyway, folks, thanks again for watching. Once again, sorry for the sound. Remember to subscribe, hit the like button, and remember to get these indicators and watch the video I did today. It was some pretty good setups. especially in a real-time mode. And I'll be doing some more of those type of little clips and videos. And I am working on an updated version, an advanced version of the, along with the indicators comes a mini course on how to use them. There's another level coming out, so whether you get them now or later, or you already have them, you'll get access to those videos once they're done. So I'm hoping that this weekend, and of course we have a long weekend, the following weekend, I can get a couple more done and just start adding to these as they go. Most of the effort will be setups for the PPMs and those type of things. So anyway, folks, thanks again for watching. We'll see you tomorrow night. Those of you in the live room, we'll see you there at 1 p.m. New York time. Thanks again for watching. Yeah, Pamela, I'll see if we can find that. I have no idea. I don't moderate the channel, so it depends on, I don't know why it would have gotten blocked, but we'll see what we can do.